And that's it. What you need to the fast track for profitable journey in trading, forex or synthetic. I'm going to just give you a kind of a friendly advice. Now, it must not be as I say it, but there are five things that you need. They're very important. Number one is basic knowledge. You can't you can't rule it out. It's a must. Basic knowledge is a must. Now, you will appreciate yourself more in exploring global financial market when you have basic knowledge. Very vital, very important, very crucial, very critical. The basic knowledge. I'm not saying for professional want to learn everything. Like, for instance, let me use an example. People approaching market and want to become a professional, pro chief analyst. No, you don't need all of those things. Why I call it basic knowledge, that is just a knowledge that will serve you. Simple. The knowledge that will serve you. You don't need to, I'm an ICT trader guru. I'm a SMC guru. I'm a top-down analyst guru. You don't need all of those things. Can you access basic knowledge that will make you to understand and recognize market, where to buy, where to sell, and stay profitable? That's what you need. Very simple. And that's why I recommend PBS Club for you. You probably will ask, why PBS Club? Because look at these 10 things we offer there. Copy trading solution, that's not the issue. Crypto portfolio and diversification, fantastic. Stock portfolio and diversification, amazing. AI trading automation, self-generated signals scanner. Now, why do I call it self-generated? I'm going to show you all of those things. Self-generated. Now, signals are good, but if you can have a self-generated, I always tell friends, I say the best signal is the one you generate by yourself. Now, but you now have an AI that can support you to generate signals so that anytime you wake up, you can be your good morning. Not that like if Felix have sent signal on Telegram group, you were not awake and the signal is over. So how will you trade? Self-generated signal scanner is the best way to go. Then live trading and scalping. So we have that. You can join us on a daily basis, or maybe 1 p.m. GMT plus one. Then daily and regular A plus signals. So we have signals that we can send on the group, but not all the time. So maybe once in a day or twice a day, and you may not be there. Expert A plus weekly market forecast and setups. Free training in Forex, futures, and synthetics. Then Felix MT5 hack for scalping. What does it cost you to be part of this club? Just 115 a year. That means every day you are only paying 0.55 cents, less than 60 cents in a day. Now, let's quickly go. Basic knowledge, very important. Second, basic tools. I talked about the PBS scanner. Empty. Now, MT5 hack. We have different scanners, which I'm going to show to you. Basic strategy. So Felix will trade P&L, price action, and liquidity concept. That's our basic strategy. Now, basic daily routine, PBS top down and pre-market scanning. So you need to look at the market. Which market do you trade? You want to look at where is it going today? Then you position yourself and wait for appropriate entry. And that's what we call it the where, the why, and the when. Right? Then finally, you need a good broker. So I call it good and supportive. Supportive. So with all brokers, many groupers are good, but what's the level of support do you have? Right? Good and supportive broker. Now let's go at your daily trading routine as a day trader or scalper. Number one, fundamental observation. So what's the fundamental observation? We call it high impact news. You have Forest Factory, for instance, where you get so, but this is achievable when you pay attention to basic knowledge, learning. Now, this is January, you want to go to February. I'm talking this training or this enlightenment is the month of February 2026. Now, today is on the 4th, so you want to check. Do we have high impact news? When we talk about high impact news, significant news, there are definitely news, but people don't pay attention. So people pay attention to this. Every significant change in any of these have an impact in the market direction, especially if you're a day trader and scalper. Now, but a swing trader may not too bother so much. It can only correct, but you want to have an idea what's going on. All right, so you can see when you have a red envelope kind of news, they are high impact news. Farm payroll, FMOC, unemployment rate, all of these are high impact news. So you can see we have high impact news today. Then tomorrow on the 5th, you have another high impact news. You get it? So here you have unemployment claims, so many on Thursday. So you want to exercise caution in your trading. Are you following? Now, so let's go. That's one important aspect why you are paying attention to this. Then next, we're going to go to the critical of the job, pre-market analysis. I call it top-down scanning. Pre-market, before the market move, you do analysis. Then execution. You must have execution. What do you mean by execution? Entry and exit. Where am I entering from? What should be the factor of my entry? So from your top-down scanning is where you discover where you are going to enter from. Now, what type of trading am I trading? And so all of these things must be defined. And which instrument am I trading? Of course, we talk about uh, trading plans and all these things, working to achieve, the basic things to make your trade a lot easier for you. All right. So in your trading plan, one of the most critical areas is about position sizing. Now, so top-down analysis, pre-market analysis. So from this scanning, you're going to find entry. Now, if you're a day trader or swing trader or intraday, from your scanning, you know where to stop to expect market to react. Now, there's something you must understand. Some of you who are trading gold now, gold is beating you black and white. Because you are conventional. Gold is already supercharged. So it's not respecting the conventional analysis. These are things that basic knowledge is important. Then, of course, in your basic knowledge, you need mentor, right? It's from the basic knowledge that will give you understanding the need for your mentor. Now, so market execution, what style do you use in entry market? All right, then after you enter market, managing your trade, risk management, all of this call risk, trade management, risk management, money management, everything you're going to do. Now, let's quickly go to the market. I trade gold more often than none. Now, I have different tools. Now, let me just show you before I do basic. Now, this is a tool. Are you seeing this tool? This is a scanner. It gives me entry and exit, right? And on this scanner, we have different scanners that have prepared, people can buy and use. This is scanner. It has different style. This is what we call PPX level, which is called psychological level. Now, we have the entry point, entry point, entry point. Now, this is 1 minute time frame, right? We have some that in combination of 1 minute, 3 minute entry point strategy, right? Then we have, so if you are the type, because gold is big volume kind of move, all right, when the market is strong and all of that. So this is 1 minute, for instance, all right? Here is the 1 minute. Look at the entry point here. Now, you see each of these lines you are seeing from this black to this black is 100 pips, 100 pips, 100 pips, 100 pips. If you look at it from here, so 1, 2, 3, 4. This is already 400 pips for gold. You have another entry here again. Okay, have another entry here. This is 100. This is 200, 300. Okay, you have an entry here. All right, this is a two combined effort. This has given you accumulation, manipulation, distribution. So probably some enter here at the confirmation of this. This first take profit, second take profit, third take profit, depending on where the market may decide to get to. Do you understand? All right. So now if you look at this market, even when this signal has not been given, you can see power of three here, accumulation, manipulation. So selling from here may not go down totally, but you will have done 100 pips. That if you're a scalper. Are you seeing it now? This is very fantastic. So this is a scanner. Now this same scanner to have another type that can help you just like trend line to help you see that if the trend momentum is still up or is already down. Do you understand? So I'm just giving you some of those scanner kind of proof, and then that you are not depending on them, neither do you depend on this trend line, but they give you an opportunity to get into the market while others are still struggling. You get it now? Look at the market open. A gap was created. You expect that this gap, look at it, massive. Then we return back. Then look at the new entry. Look at the continue entry, continue entry, continue entry, continue entry. You see that? Okay. Now, this is a reversal sell. All right. And I think since then, this is the major reversal sell. Then continue entry. As market was rushing down here, you have gotten another entry here, and then you have done probably 300 pips. Do you get it now? All right. So this is a scanner. All right. So this same style scanner T occur here. Now, so that's one. Then we have another one. This is another scanner that you can take. But all of our scanner is combined with what we call PBS sniper calls, right? But you use it supporting other scanners. So whichever one you have, you want there, it can always be provided. You get it? All right. So this is good. I think I was analyzing the other day. All right. So this is a scanner. Now, that's talking about our tool now that you can use to be making money on gold, on a daily basis, following just simple instruction. Are you following? So let's go here. Go here. I just want to open most of the scanner so that you can see. So it's opening. They are opening. Powers could be network. So now, just to tell you that scanner automation help you to look at the market, all right, and make decision and be cool, making money and helping yourself as much as possible. Do you get it now? All right. So now, let's come to reality. Either you are scalping, you are day trading, and all of that. Let's come to reality. I know many of you have burden about trading, and that's why I say you need basic knowledge. As a day trader, what am I supposed to do? I have to do check fundamentals and then check other factors, right? So once you check environmental, okay, the news are okay in the afternoon around 2:15 p.m. So if I'm trading now, by that towards that time, I need to be careful so that I will not fall victim. Now, let me clear up these things. So let me take off this. Okay, let me take off this. All right, so here we come. Now, what am I supposed to do? So let me perhaps all the drawing to be off. So this is gold. What am I supposed to do? When I come into the market, I need to see the overview of the day. So it's very important. Okay. Now, what I taught my students is very simple. There's what called swing point in the market. We call it what? Swing point. Fantastic. It's a cheap code I'm just giving to you. Swing point in the market. Now, ordinarily, when you come on a daily time frame, how I trade on my daily time frame. So that's why you need to come to PBX. So you get more detailed knowledge. How I trade is very simple. I come in to check the previous day high and low. These are very fantastic liquidity level. So that means look at the daily candle. Here is the high, and here is the low. In most cases, if you are normal, not abnormal market, as good will always be, is that by now. So if it's an abnormal market, by now, gold will have done something. But let me tell you something. There's a swing point. What's the swing point? This market crashed from here down to this point. 3 consecutive days. 1, 2, 3. Crash. Are you following? One, two, three, crash, total crash. Sorry, let me take up something here. Here, 499. Okay, so there is something significant here. There was a swing point. How do you mean by a swing point? Now, so if you come to the market, probably would say check the recent break of structure. So if we look at this point here, for instance, this is actually a break. Because there's another flow right here. Now, you expect that the market, but this is a swing point. This is daily time frame. What do you see here? This is swing point. Now, this is a break. Beautiful break, right? You see that people stay here for a very long time without understanding what's going on. This why? Because the market swing up. This is a swing high and a swing low. Now, after a swing high, there was a swing low. That means the market was here. Now, the market move and crosses this. That's what we call break of structure. So now, so you need to understand structural change. Okay? So the structural change. So this is a break of structure. So the structural bias is what you are checking. Oh, market is bullish. I can see it straight away. Then you want to look at the recent break. So this is a break of structure. And the market move up. Ordinarily, normal ideal circumstances, you want to look at where is the source of that massive move that broke this. The source is there from this beginning. So you expect the market to come back and actually do what we call mitigation. That is, tap it to say, okay, thank you, I recognize you, and balance and settle deal with it and move. So after settling deals with it and move, then you are taking. But in this case, the market did not come down. That's one. That's one aspect. We have similar thing here. A new high was set. After the new high was set, the market came down. So that means this market that came down, it never returned back to this. Just recognize some places here, a new break happened. This is the new break that massively moved. We have a sub-minor here, but look at it. This new break occurred massively. You get it? Massively occurred and push up. Now, so you are expecting something here. You're expecting something here like this. This is a source. So that's why basic knowledge is required. And then when you follow mentorship continually, this is a source. And remember, I told you again too that there was a source too that before this massive move happened. So you can see this is just like a demand zone. That's a source. Okay, that's a source. So we have a source there. Then we have another source here that's obvious. Do you understand? All right. So I'm just trying to be fast so that you understand what we're doing. Now that's a source there. Now market went up consistently. Even this is doji. 1, 2, 3, 4, 5, 6, 7, 8 for consecutive 8 days. The market continued to brew up massively. Now what happened? The market got to a point. It blew up though, and then finishes negative. Now, that means you start having a kind of change of mind. The market started changing its mind. So, since he blew up this, he took out this high. Then the market came the following, the third day, and then you have this bearish. So, this is a swing point, beginning of market changing. So, but are you going to see it properly when the market, are you going to trade it like this in 1 hour in daily time frame? No, that's when you go down to the lower time frame. I'm trying to explain the whole framework for you. Now, the market again, what happened? It came down, the old place that ought to have been touched, Look at this old point. He came down crazily to that old point and touch. After touching that old point, what happened? The market reversed back and create another what? A swing point. That's it. This is the swing point here. This is another swing point on daily time frame. So it's getting more interesting. Then the market yesterday, we printed this. Today, of course, he first came in. So today's is bullish. Okay. So yesterday was bullish. Market closed above the high. That's the bullish market continued. And then today already, that means the market first traveled down like this way, handle anatomy, and then it's going up. So you're now looking to what extent I'm going to go. It has broken the high of yesterday and probably retested. So the next year, so this is daily. You have just done this on daily breakup. So okay, market is going up. You're interested now here because these three candles have informed you that the market is going up. You step down to 4 hours. This is what we call pre-market scanning. All right. So pre-market scanning and analysis. So now I didn't come here to have shown you some things that have happened here on this film 4 hours. This same 4 hours, you will have seen the market did this on 4 hours while it was going up. Break of structure, another break of structure here. So since this was a last break, you have something like this here. Are you follow now? So then this break it again, you have something like this here. Okay? So as you have something like that there, so what you were expecting is that when this market was going up, you expect the market to return back here and bounce. But unfortunately, it came down to this point to come and bounce here. This bounce is good, no, nevertheless. Then you continue that navigating up. The market has changed entirely. So there are a few things. We call them PDRAs and institutional footprint. And that's why I told you that ICT, SMC, they are framework, they are not strategy. They are inside which you can pick what to work with. We have so many things. Of course, if you want to learn more about that, you come into our ecosystem and subscribe. You can get access to more detailed training. But I'm just doing a scanning and what you are supposed to be doing on a daily basis, and then so that you can enjoy your market. Now, if you look at this, when this market was traveling down here on 4 hour time frame, you have a structural break here. Now, how will you now ask me, Feli, how will I be able to perfect this thing you are just saying commonly like this? That's why you need to come to PBX because you learn and we give what you're supposed to be learning from Plan B inner card. So you're supposed to be learning this on inner code, but we decide to give it out on the general PBS club, which you're only paying 150 for a year. And so you are learning big strategy. This is a break of structure, right? Now, but something happened here. We have what is called an imbalance. Trade market price move from balance to an imbalance and to rebalance. Good. You see what happened here? So that is a fair value gap. This market broke down a fair value gap. So now we have another break of structure down here. So you see that the narrative is very important. Sometimes a footprint like fair value gap, I don't like erasing it because when market come, they may react. So you can see what I'm now? Very plain and simple. Now the market, it broke structure, it broke another one here. Can you see that? It's another break of structure. Go after coming down here, a push up here. So if there's a break of structure there, so here there's break of structure, so you have this as a high. Then after that, so this is, then we have a high here, internal. So if that's the case, that's on 4 hours. This is a low, this is a high, and a new low. So this is a lower low, a higher low. So that means on 4 hours, there's a market structure shift. This is now break of structure based on this. The market. So, but you are wary of this one. Why? This is a fair value gap. Now we'll go to 1 hour. Now going to 1 hour, remember we marked the previous day high here and previous day low here. Now going to 1 hour. So let me take off all of this so that you don't stay confused, right? Because this become an internal structure. On 1 hour, there is the turning point, which is the same turning point that happened on daily time frame. There is already a turning point. But there was a last break of structure that pushed the market down, which was here. Now, so if this was the one that pushed the market down, this was a break of structure. Here was a break that was coming from here. We have a break here. So that means this is the high, right? So the high, the market has broke the high. That is shift in market structure. How? This is this. The market came down here. Okay? The market came down here and rally up. Rally up. So that means this is this here. Take this way. So on 1 hour, we have a shift. We have what? A shift. And once you have a shift, you have an idea that markets have changed direction. So this is a shift on 1 hour time frame. Now, so what I do is to take a forecasting tool called Fibonacci retracement. Once I see a shift, so I move from here to here, even if you are a day trader, intraday swing trader. Now, what you mean is that the market should be purchased. Normally, if you want to buy things, you look for a cheaper price. Now, also, and that's why you do this. And you expect the market to come down here. Of course, there's a reference point here. Probably I may not recognize. Remember again, the market came down here to recognize and hit below 50, the 50 level, which about the PDR is premium and discount arrangement. So here you have this. Then, but there are things you will check if you go to lower time frame playing out there. So this is where you were waiting for this market when it jump up here. Predominantly, it actually play out, but not all the time. So there's some inducement. All right, this is liquidity. Right, took out this liquidity and then rally down here. So make more sense now that, okay, you are looking at the market as it were. So market came down, you were able to buy. Your target would be to target this point. So to target that point is your own area. So I haven't entered here, you're targeting this. Fortunately, we have a break of structure. So there was a structural break. So you now expect that, okay, look at this place. In this structural break, you have an area which you're expecting the market to come down to. Can you see that? Because this has been broken. You expect the market to come down here. It didn't do that. You have a new break because it pulled back and now continue. So that means after this pullback occur and it continues, so you expect the market to come down somewhere here. The market did not get back there. Have you seen something? Did. Now, instead, it just did some magic move and continue. So this pause here is already a swing high. It's a pause. Pause the market. What happened? It broke new high. So that means if you break this new high, right, this is not valid. But probably look at last opposing candle before the move. So you can invariably take this, but the market became so choppy. Okay, so look at it. So we now have a new break based on what? Based on previous day high. So ideally, you're looking at the market to come to this point, one, and the other extreme here. Now, so that's where you are right now. Now, remember there was a fair value gap. So now that this one have done this fair value gap, that's what gives strength to this again. You now have it now become an inverse FVG because it didn't respect it. Okay, no. Here respected it and rejected to sell. So now you see you are waiting for this market here. So will I wait for this market here on 1 hour, hoping that it will come down? Not at all. What then should I do? That's when you go down to another lower time frame. So this is a breakup structure. So if you want to learn more of this simplified fashion, I know they have complicated issues for you about market structure, price action, and all the like. So go to 30 minutes, probably to see more refinement, but I think we're almost just having the same thing. Then probably we'll go to 15 minutes, which if you are an intraday trader, you're supposed to be on that 15 minute as your last point. So now let's look at it. On 15 minutes, yes, you have a breakup structure. Ideal. So that means on 15 minutes, now you have a breakup structure, then you are supposed to be waiting here. Can you see that? So you're supposed to be waiting here. But what did the market do? Market push up. It pulled back. It never got here. So we can say this is an inducement. So that means this is a liquidity. So you expect the market to come down, all right, take out this liquidity and perhaps be able to come to mitigate this. But would it go do that? You can't give a guarantee. So let's say tentatively, we're having a high there, but it has not actually been established because this candle has not closed. So you want to see it close, and I think we are forming that gradually there. So if you close this here, for instance, you will see that um, the PDR is, that's your point of interest or area of focus. I call it area of focus, should be here. So don't mind those mark I've marked. So, but if it's going to be there, so let me just take out some. So you can see this is 50, this is the one, and all of that. So if we're going to come to a good discount, that means you're supposed to come back to this point. Or this extreme. So we can just take it together. So that's ideal place you are now on 15-minute time frame to be waiting for gold to come to. Will it come there? You have to be very careful. They'll go to 5 minutes. That's when the market comes here. Your 5 minutes actually your confirmation. But look at the challenge. On the 5 minute, do you see what the market did? The market pulled back on 5 minutes, meaning that it's changing. So that's why gold is not your mate. So internal structure. This is a break, right? They will have a high here, create a new high here, then a low here. So that means you have internal structure. Like in this internal structure, what do you have? This internal structure will produce money while you are waiting for something. Look at it. Reversal to this. We have a break of structure. So if you do that, you have taken from this swing low to this swing high. You return back to this point. You see that? Then a buy or call. So we have another breakout structure here. Look at it here. Internal structure, 5 minutes. We'll take it from this low to this high. So it didn't get down to this point. You can't really give clarification of what it come to mitigate there. So you just pull back. But after the pullback, you have a swing point. That is a pullback and reversal. This is a swing point. So that swing point should have given you probably an entry if you know what you're doing anyway. Then that's the break of structure. When you break, this is the only market now that, okay, yeah, it breaks the structure, but this place was already mitigated. I think so. Then, so that is the movement. So that means if we take it from here, to this point, it just came on top of that 50. Are you seeing that? And then bounce with a swing point again. So that means with this swing point, you are in the trade. Let me tell you something. You don't see how many pips that has done, but the growth now is stunted. It's already 300 pips. Oh, yes. Okay. So that means ordinarily on 5-minute time frame, you should be calling this one a break of structure. Yes, it is. Okay. Now, so that means you're taking your Fibonacci retracement. Has it stopped? No, it's just creating some kind of funny thing. So here, that means you're looking at coming back to this other block. But there's something significant you must check here. Why you're expecting the market to come to this other block, you should check this. So that means this is the first area that the market could pull back to and now continue. Why you are waiting? Probably here, and all of that. You can see down the top-down scanning is crucial for you finding a trade. So when you have done this analysis, you're good. Then that's where the scanner comes to do your job for you. You already understood the market is an uptrend. Okay, so you can now take your scanner. So imagine when the market aggressively come down here, you're already in the trade. So look at it. So taking your scanner now, from here to here, it's 100 pips. To here is 200 pips, 300 pips, 400 pips. You've done. This is 1 minute. Okay, this is 1 minute. Now this sell, right, he asks you to actually sell. You sell there, you probably will be targeting here. Well, up to now, it has not actually closed. So you're targeting here. And if you didn't hold, but which you are looking at, this is support, 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 support. You're expecting it to hold. That means you're looking at 5,050 when the market come there. If you come there and decide to bounce, can you see that movement now? Amazing, right? Fantastic. So this sell, that's your scanning, your scanner. Can you see that? Amazing. Can you see that? So the market is respecting itself. So you can come here. If you come here, let me show you an alignment. Though this is 1 minute time frame. But whatever happened in daily, happen in all the time frame. That means you are waiting here. Except it didn't hold, then you will now be targeting those areas we checked before, which was in this your analysis. So can you see that? You can see those points we marked. So we have different points. So when you come there, instead of panicking, you want to look at the entry system. That's what we call market execution. All right. So I just have to show you guys this. This is a massive stuff when it comes to trading. So you are intentional, you are strategic. Okay. So this is another scanner that's using smart money concept. You have a break of structure. You have another block. This is a breaker block. So the market actually did what? Come to the breaker block. Look at the power of 3. Look at your scanner. Ask you to buy. So this you buy with confidence. Your stop loss below the breaker block. And you're targeting the first place here. Take profit here. So if you look at it, that's taking this here. Long. Here. Your stop loss. Here. 540. Wow, big. So that's where you need to travel to lower time frame. Now, if I want to travel to lower time frame, so look at it here. So look at it here. So you go back to 5 minutes. You can go back to as low as 1 minute. Okay, see that? So we go to 5 minutes. Came down more. Then you go to 1 minute or 3 minutes first even. So 3 minutes. This is a breakout structure. Now there's a sweep. You can see 3 minutes. So you can enter from here. So if you enter from here, the breakout block is still there, right? So if you enter from there, so your stop loss will not get to that point. So your stop loss will be more, of course, your stretch here is going to be big. So you can go to 1 minute. So you can see your entry will have been earlier. Massive. This is a powerful one. Record structure. This is this entry. So your entry will have been there. And like this. The stop loss below here. Of course, when you use the psychological level, you're going to see the reason why your stop loss was engineered here. 170 pips. So let's stretch further. Let's take it up. Let's go back to 5 minutes. Okay, you see something? I'm going back to 5 minutes. This could be your first target. That's 1,007 pips. So go down to 15 minutes. This is why we go to lower time frame. Snapper entry. Okay, can you tell yourself this now? Have you seen how the market can play out? You're able to catch very early entry. And now as the market continue, you have some position you are holding. Yes. Do you understand? You have some position you're holding, and that's what it is. That will be 1,690. And there's an existing order block there. So if you go into this place now, I'll be 2,200 and something pips. Now, if you check what's the time of this, it was around 8 p.m. Nigerian local time. That's GMT plus one. So the trade is running, and then you're good. Yes. So that is what it is, ladies and gentlemen. I just have to show you the simple way of looking at your market. So this is the scanner. Look at, if you ever look at that, the market return back to breakout structure and all that. And we have the one for kind of demand and supply, or the one for, yes, right here. So demand and supply. The market is currently at the supply zone, trying to break out of that point. If you cannot break it, you see those places we marked. The market will wire down. So we go to 5 minutes. That resistance is still there. 15 minutes. So we have potentials of going back to 5,132. Then look at the demand zone. As the market moved, it kept retesting and retesting, but it didn't close below that. Retesting and retesting. So that may form your entry. This is still at 8 p.m. Right? So that is what you leverage on working using all of these tools. Does that make sense for you? I know it does. So this is another scanner. And lastly, you have similar type of scanners anyway. Okay, you see now we're going towards that supply zone, which is not respected. We'll continue up, but see here, the market is what it is. So the pullback is expected, right? Like I've told you, go back to this place we did the analysis. You see the market is struggling. So you see that? So when you come there and react, you want to be looking for an entry for buy. So this is just what you need. So coming to PBX, show you the simplest way of attacking the market. What do you need? Just $150. So if you want to come, you can just pay for the scanner. The scanner is $200 yearly, and then you'll be given access, and you can use it as you like. That's your choice. Thank you very much. My name is Felix. You want to reach out to us, you can send a WhatsApp message to this number +234 90 470 44 and 998. Take the number again, +234 90 470 44 998. So chat, we can give you response. Thank you and do have a nice time. Bye.